Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we help you learn to invest in 45 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going, bro?
I'm very good, Bryce. Good to be with you again.
Yes.
Our last one-on-one episode, I guess you could call it, for 2019.
Absolutely. This is our 2019 yearly wrap episode. It is the start of December, so we're leaving ourselves
we need
a
a
bit
holiday.
short. But yeah, we've got a few awesome interviews coming up over the next few weeks.
Yes.
And a couple of episodes around valuation that have been hot asked for from the community. So we thought we'd finish the year with that, but we can't go out without doubling back on the bold predictions that we made at the start of 2019.
It has been an eventful year, and it's worth us tying a bow on some of these things and closing out the year. So for people who are confused about why we are closing out the year and then continue to release episodes, it's just the nature of the scheduling and when we could get guests and stuff like that. But rest assured, it's all intentional.
Absolutely. So this episode, we will review our bold predictions, see who's come away with who's owing who the beers. I think that's what we bet.
Yeah, I think a beer on everyone.
A beer on each. Luckily, there's a pub next door to the studio, so we can go there afterwards. We will also have a look at our stock picks of the year.
Yes.
See who won that.
Yep.
Knowing that there's still a few weeks to go, but we'll probably call it here.
I don't know if that's a risk.
And then we'll close out, Ren, with choosing the 10 stocks that we're going to do a deep dive on over the Christmas break. Now, we reached out to all of our equity mates in the community over the last couple of weeks to get some inspiration for stocks. Now, we had 180 recommendations or requests come in from everyone about stocks that they would like us to have a bit of a look at in some depth and do an episode on. So thank you to everyone who did that. What we will be doing is randomly selecting from that list of 180, and we'll go from there. So we'll close out the episode with that.
Yeah. So we did, 5 last year in our summer series. We're going to double it this year just because there was an overwhelming response in terms of the companies that people asked us to look at.
Well, also because we want a longer holiday.
True. We're going to do 52 weeks of this. But I think I loved doing this content last year. I thought it was, rather than asking people what companies we should select, we literally just randomly generated ASX codes, and we ended up looking at companies that we'd never heard of before, and it was really interesting to do. You got your stock of the year from this process, and I think what we found was that when we released it, people loved that content as well, because part of the joy of investing is finding companies doing really interesting things that you didn't know about and potentially finding investment opportunities on the back of it. So I'm really excited to do this again, and hopefully we do companies that keeps everyone's interest while we're off eating too much and enjoying the summer.
Fingers crossed we don't get 10 nickel miners. No, we'll have to put some rules around it, but let's get stuck into what was 2019, Ren. We made, maybe 10 predictions or thereabouts?
Yeah, something like that.
So let's kick off.
Yes. So the way it worked was we basically went 1 for 1, and the other person could decide either to take that bet or not take that bet. So we'll just start at the beginning. So I kicked it off. I said the S&P 500 won't fall below the 24th of December low, because you got to remember that the end of last year we had a pretty shocking run in the market.
Yeah.
And so I said it won't fall below that low until the second half of 2019.
Yes.
You didn't take that bet, and that was a good call because it never dropped below that December low.
No, that was the low.
Yes, it's up 33.5% since that December low.
Huge run.
Yes.
So I didn't take that, but then I came in with a bet that kind of contradicted it in some way. I said the S&P will drop another 400 points, or roughly 15% by the end of the year. And you did take that bet.
I did, and you may be able to say the year's not over yet. But I think...
Look, let's say for the purposes of this...
Unless Trump does something big.
Yeah. So, Ren, you did take that bet and you win that bet. It hasn't dropped 400 points or roughly 15% to this day. And unless something drastic happens,
Yes.
it doesn't look likely that it will.
I'm going to book that beer in for me.
So that's one beer.
So I then went and I said the buy now, pay later sector will have a tough year. Afterpay won't be above its share price at the start of the year by the end of the year. Now, you took that because you love Afterpay.
Oh, mate, I had faith. This was a home run for me. Couldn't believe you said it.
I know. I like to be controversial, which will be a theme that I think comes up throughout. But on the 2nd of Jan, Afterpay's share price was $12 and it is now $31.60.
Huge year.
So you could say I was wrong.
You could.
You could say I owe you a beer.
Well, yes, that's up 163%. But then to put some context around the buy now, pay later sector as well, Ren, Zip Pay, it started at $1.10 on the 2nd of Jan, a competitor to Afterpay here in Australia, and they're now $3.92, so up 256% as well. We've seen later in this half of the year that some competition's now starting to come into the market a bit broadly, but both of them performing really well. So that's a beer to me. Yes,
and luckily, if I'm wrong by an inch or a mile, it's still just one beer.
Yes,
so,
true.
It all just counts as one.
So then, Ren, another stock that I really love is Disney. I said that, I made a bet that Disney will outperform the Dow Jones. You didn't take that bet, and that's just as well because the Dow Jones started the year at 23,000.
Who cares about points? Just tell us percentages.
It's up year to date 20.15%.
Okay, not bad.
Disney had an amazing year in terms of movie release and I think holds a number of the box office records. They're up 39% this year. So convincingly beat the Dow Jones and has actually, beaten most markets around the world. So just as well, Ren, you didn't take that bet, but just as well, I did invest in Disney at the start of the year.
Yes, I am also a Disney shareholder. And if people are looking for Christmas reading, it's getting to that time. Bob Iger, the CEO of Disney, has released a book about his 15 years as CEO of Disney. Apparently, it's really good. It's definitely on my reading list.
Nice.
Apparently, he got advice that he should keep his book to 200 pages. And so, like, these big things, like deciding to acquire Marvel and stuff like that are like 10 pages.
Damn.
So it's pretty short and sharp. He did a lot in 15 years. Unbelievable CEO.
How big's the size of the font, though?
Good question.
Well, I hope that sheds some light on how they justify his $60 million a year salary.
Well, I think the 39% share price increase this year is how they justify it. So, moving on from a CEO who can justify a big salary to a CEO that could not, my next one was about Adam Newman and his company WeWork. So I predicted at the start of 2019 that WeWork is going to be the troubled startup story of the year. And you then questioned how I measure that. And then I said WeWork will go into administration.
Yeah.
Yeah.
Well, that was the pass mark for this. I'm going to give you half a beer.
Oh, come on.
No, I did take this bet. I thought that WeWork would turn out to be a lot more successful.
Yeah, well, at the time it was riding high.
Yeah.
It was raking in money from Masayoshi-san. It was talking about an IPO.
Yeah. So then why'd you make this bet? Can you remember what your thinking was? I know there was some commentary at the time about the weird and wonderful dealings that were going on between
That's right. Yeah.
between the CEO and how he owned the property and they were leasing back to the business and all that weird stuff.
Yeah, there was that. I've for a while thought that some of these companies are too overvalued, that these unicorns are not all they're cracked up to be. It's far worse than I probably expected it to be.
Yeah.
I was a week away from it going into administration, I think.
Yeah. All right. Well, let's say
no. That
it's
was
a beer.
That was the. You can get me like a zero alcohol beer or something.
A Carlton, whatever those
Carlton
new ones are.
Yeah.
Fine. But good prediction. It definitely was the troubled startup story of 2019.
Yes.
Speaking of startups, and we had a couple of big IPOs this year, so I bet that Lyft would outperform Uber in percentage terms. You took this bet. Lucky for you, Ren, I did not come out on the winning side of this. So Uber, well, let's start with Lyft. Lyft is actually down 37.4% since its IPO in March.
Yeah, and I think it's come back a bit, hasn't it? Because it was down over 50% at one stage.
It's come back a little, yeah, but certainly not the good news story that I'm sure many of its investors were hoping for. But then we also had Uber that IPO'd this year, massive story. It IPO'd a few months after Lyft, and it is down 28.9%. So both rideshare companies suffering losses in their first year on the market, but unfortunately Uber suffering a little less than Lyft. So that's another one to you, Ren. Very interested to see how this pans out, though, over the next few years.
So let me ask you this. If you had to invest in one of them now, which one would you be more interested in?
Uber.
Yeah, same.
Yeah.
Why?
Just because of all the other things that they've got going on outside of rideshare.
Yeah.
All right. Now, we move a little away from markets here.
We did. These are interesting, these ones. So I was up next and I said there would be no Brexit in 2019 and you took that bet. And whilst we do have an election on, the 15th of December or something?
Yeah.
I think we can put this one in the books.
Safe to say we are not going to see a Brexit this year. And I did take that bet, so another one to you, Ren.
Yes.
Mate, you're going to be pissed after this.
No.
Now, I continued on with the theme that I had in 2018, which was Trump, and I bet that Trump would be impeached by the end of the year. You took the bet. It is certainly to be confirmed whether or not he will be impeached, and there are impeachment proceedings underway against Trump at the moment, but very unlikely that something happens this side of Christmas is my gut feeling. You seem to know a bit more about American politics than I do, Ren.
So, apparently the House Intelligence Committee whichever the committee that is going to produce a report this side of Christmas and give it to the Senate. You're probably right. It's unlikely that anything big happens this side of Christmas. I think if I get half a point for WeWork, though, you'll definitely get half a point for this. I think the timing might be slightly off, but he's halfway there.
We'll go with half a point, so a non-alcoholic beer.
Yes.
And then you continued with the Trump theme.
It just means that you can make this prediction for a third time in 2020.
True, hopefully. Yes, so you continued with the Trump theme.
I did, and I predicted that Trump would get his wall.
I took the bet.
Now, did he get his wall?
Technically speaking, I think to the grandeur that he made it out, no, but I know that there are, construction going on and whatnot, but it's just completely fallen away from the media now. There's no discussion about it.
We've all seen media of the wall being put up.
Yeah.
I've just had a quick Google. It looks like there's a report from September this year saying 65 miles of new border wall has been constructed.
But I mean, that's a drop in the ocean compared to the length of the US-Mexico border.
All right, let's have a look. If it's at least 1%, give it to me.
1%?
I think the US-Mexico border is measured in the thousands of kilometers.
I imagine so. And I think 65 miles is not really going to give you 1% border coverage. But
3,145 kilometers, or let's call it 2,000 miles.
So no.
It's more than 1%.
Yeah. I'm not giving it to you.
Okay, yeah, you don't have to give it to me. That's fine. If people think I should have got that, at Bryce Lesky on...
No. All right, so back to markets. So at the start of the year, Ren, there was all this chat about value, where it's going, where its place will be.
Sorry. Do you get a beer for that?
I get a beer for that.
Yeah, okay. Yeah.
Sorry, yeah.
Just trying to keep score here.
So yeah, at the start of the year, chat about value versus growth and whether or not value would outperform growth this year. So my bet was that value does outperform growth, and you didn't take it because you were also in agreement that we would see a pretty good year for value investors. Now, the way that I've measured this, Ren, is by the performance of two Vanguard ETFs. One is a global value equity active managed ETF, and the other is a Vanguard Global Growth ETF. I think that's a pretty fair way to do it.
Makes sense.
The value ETF is up 14.5% year to date, and the growth ETF is up 23% year to date. So based on those, we can say that for the purpose of this, growth has been a better investment this year.
Yeah.
No winners there, though.
No, except growth investors.
Yes.
Next one for me was at the start of 2019, we were looking down the barrel of an election, and I said that Australia would get a minority government, which you took. ScoMo had his Stephen Bradbury run and won a majority, so you won a beer.
That is a beer for me.
You and ScoMo have never been more aligned.
And then to close it out, Ren, of course, we had to have a couple of bets on the footy. So I bet that Essendon will win at least 2 finals this year. I was feeling very confident.
How did that go?
Unfortunately, the year wasn't what I expected it to be, Ren. So no, I did not win that. But
yes, and then I decided to make a big call on the reigning premiers and made the call that West Coast wouldn't make the 8, and they made the 8.
Yeah. So I win that beer, you win the beer for the Essendon, and that's it. So we've got some time off over the Christmas period to have a good think about what our 2020 predictions are going to be. And if anything drastic does happen that changes the outcome of any of those, we'll update everyone when we can, but I think looking unlikely at this stage.
But look, as it stands, it's actually 4.5 beers each.
Oh, there you go.
Yeah.
So then we come to the decider, which was the stock of the year.
Consider it decided then.
Yeah. Now, if anyone is new to the show and have just tuned in, then this is going to be great. You'd have no idea, or potentially no idea about which stocks we've picked. But if you've been listening to us for a few years now, or even since the start of the year, you would know that Ren is already in a very tough position when it comes to his stock of the year. So, do you want to kick it off, Ren? Or
Sure.
Equity, mate.
So I picked Costa Group, one of Australia's largest horticulture suppliers. They essentially supply a number of fruit and veg to, the supermarkets and stuff domestically, but then also they export it overseas. The reason I picked them was because they updated the market and gave some weak guidance, and the market reacted quite poorly. And so I thought potentially here's a chance for the market to overreact, and if I choose it for my stock of the year, it'll rebound. That was one way to think about it. The other, turns out correct way to think about it would have been this is a sign of things to come. And that first profit warning was the first of 4 profit warnings that have come out this year. The share price has dropped 61% year to date, or 42% since I picked it. Its earnings have fallen off a cliff and basically dropped over 90%. Now look, I guess with agricultural companies, there's probably always a distinction to be made between structural issues and cyclical issues. And I think a lot of the problems here are cyclical.
Absolutely.
They're getting hammered by the drought and the high water prices that result. And then they're also seeing smaller and less lucrative harvests because of the drought. And, there's all these flow-on effects. Obviously, bushfires of late haven't helped. It has just been a very tough year to be in agriculture. So I think 2019 has been a bad year for Costa. It's been a bad year to be in Australian agriculture more generally. I still think Costa is an interesting company structurally, but I'm once bitten, twice shy, I guess. It has just been a shocker of a year. For example, one of their big lines are mushrooms, and mushrooms historically have been quite profitable, but this year mushroom profitability has fallen between 30 and 40%. They're just getting slammed, yeah.
So what's the outlook for 2020?
I need to redeem myself in stock of the year.
Yeah, but what about for Costa?
Citi Group have warned of a tough year ahead, including key lines such as mushrooms, blueberries and citrus, which are really their main lines. I think they've got 5 major sort of categories and they're 3 of them. Yeah, look, no one knows when the drought is going to let up. No one knows how this summer is going to play out in terms of bushfires in Australia. There is just so much uncertainty that it's almost impossible to mitigate that risk. Maybe there's ways you could trade different commodity futures and hedge your risk that way. But look, at the end of the day, it's just Costas for me is a steer clear. The agricultural sector in general for me is a steer clear. I don't understand it well enough. I'm not a climate scientist or a meteorologist. just get killed by the weather.
Yeah. Without going into too much for agriculture, for me, I think the side that I like thinking about when it comes to agriculture are the businesses that are leveraging the tech that's now coming into ag, because there's a lot of disruption happening in that space. You know,
John Deere, those kind of companies.
Yeah,
Internet
exactly.
of Things.
Yeah, absolutely.
There's an age-old adage: you don't get rich mining for gold. You get rich selling shovels and picks to gold miners. I think it's
makes a lot of sense.
Yeah. So I think rather than, trying to grow the blueberries and the mushrooms themselves, maybe you sell, in John Deere's case, you sell things like Internet of Things, precision farming.
Yeah.
Or maybe, you look at someone like New Farm or something like that sells fertilizer and stuff like that. Look, plenty of people are going to make money on Costas over the long term. It just wasn't me this year.
Yeah, nice. So down, unfortunately, 42%?
Yes.
Something like that.
Yes.
Nice. Well, my stock pick of the year was Baby Bunting, and it, unlike Costa, has also had a couple of announcements over the last year, but all for good reason. As you said at the start of the show, Ren, this was a stock that we came across when we were doing our summer series last year, and I loved it primarily because, I think we both really thought it was a great opportunity. At the time, a lot of the competitors in this space, so they're a provider of all things baby equipment and needs. And a lot of their competitors had gone out of business, so it left them in a position to really capitalize on the market and solidify their position as the number one provider for baby accessories and whatnot, which they have managed to do, Ren. Year to date, their stock price is up 49.1%. So by far and away has beat market return. And, phenomenal results for shareholders. Market cap is just under 500 billion now. So, 500 billion, 500 million.
It's the Apple of baby products.
426 million. So it's done incredibly well. And as we spoke about when we did the episode on it right back at the start of the year, they wanted to focus on a few things to really grow this year, and that was penetration and development of their private label, expansion of their network to increase market share, and also really focus on online sales. And those three things they managed to execute really well this year. The gross margin has improved from their private label. For those that aren't in retail, private label, you generally get much better margins than when you're working with other branded suppliers. And so they want to increase their private label over the next few years. They opened 6 new stores, so they now have a total of 53, and their priority this year was to open stores in quite sort of high profile areas, which they've managed to do as well. So where, I guess where they can take advantage of maybe higher incomes in those areas. And also online growth is just, going from strength to strength. 11% of sales come from online now, which is great penetration, and they're hoping to really improve that over the next few years. So from their point of view, they've acknowledged that retail is sort of tough at the moment, a bit tight, but they also believe that their market area or their sort of industry isn't as affected by changes in economic activity just because everyone keeps having babies.
I could say that. Like you're not gonna stop spending on your baby.
Yeah.
You're gonna still get them, the fancy car seat and everything. The other thing is, it feels like baby products are one of those sort of categories of retail where you want to go in and you want to touch it, you want to, put your baby in it, you want to speak to the salesperson. It feels like a very high touch sales pitch. Kind of like, I'm trying to think of another good example. Back in the day, I would have said like high-end electronics or something like that, but it feels like a lot of that's going online now. But still, it feels like one of those things where you want to be reassured by the salesperson that, this is the best for your baby. And so I feel like part of it is sort of protected from Amazon in how people want to buy this kind of stuff.
Yeah, I mean, it's a good point. I couldn't speak from experience. I don't have any
Not
kids.
Yet.
But yeah, I think especially for something that is as precious as a baby, you do want to be making the right decision.
Yeah.
So
I mean, look, the counterpoint to that is about 6 of their competitors went out of business over the last 2 years. So, yeah.
But to that point, with online growing as fast as it is, perhaps there's a number of products out there that you don't need to do that. So
I would be interested to understand what their sales split is. And if you talk about things like car seats and prams and stuff, which are like the big ticket items, are they the things that people want high touch, involved sales in stores? And then what Baby Bunting find is once they're in their ecosystem with those products, they then buy all the ancillary stuff you can buy online.
Clothing and
because
bits and pieces.
If that is the case, and if you can use those big ticket items to get people into your ecosystem, and then people are buying it from the Baby Bunting website rather than the Amazon website, that is just a ticket for
Sorted.
retail gold.
Yeah.
Because you capture them, they'll keep coming back to you for the big high touch items, and then they'll supplement it with your store online. You're laughing. Yeah.
Nice. So that's a bit of a wrap. 2019 bold predictions in our 2 stock of the year. Again, we'll have to do some thinking over the break to come up with two new stock picks of the year. And we're hoping to also get a mastermind episode in before Christmas with Julia and maybe get her take on what she might think stock of the year is for 2020.
But look, regardless of if we can or can't get her this side of Christmas, she will be around next year as well.
Absolutely.
Well, we've had some people ask, where is she? And she's right in the midst of setting up her own funds management business.
Yeah.
So not only will she be back next year, but she'll be back and better than ever because she'll be spending all day investing, and we're then going to take advantage of that knowledge and broadcast it to the internet through this podcast.
Yeah. All right, Ren. Well, now for the fun part.
Yes.
Let's choose our Christmas stocks. So as we said at the start of the show, 180 submissions of stocks from Equity Mates community have come in. We are going to choose 10. Now, to be transparent on how we are going to do this, we have all of them in an Excel spreadsheet. We are just going to randomize the list, and we're going to be choosing the number one stock that comes up each time we do a randomization. So 10 random clicks of the button, Ren, we'll choose the number one each time and give a very brief idea of what the company is. Apologies to everyone. We don't have the names of who submitted these. We'd love to give you a shout out, but if it's you, thank you. Let's do it.
And I guess the last thing is you flagged the risk around just getting mining companies.
Yes. What are we going to do here? What's the rules?
Should we say we each get 2 vetoes?
2 vetoes for mining specific or just 2?
Yeah.
Sure. I like that.
Okay, let's give it a try.
2 vetoes, but you can't do it in hindsight. Like you can't get to the end of the 10 and go, I want to veto that. I want to veto that.
No. It has to be
on the spot.
Yeah. All right, you ready?
Yeah.
All right, I'm randomizing it now. First company, Dexus, ASX code DXS. Dexus is a real estate investment trust managing high-quality Australian property.
Yeah, I like Dexus. Have you heard of it before, Ren?
I think I have. I'm trying to figure out where I have, though.
I think they're in the ASX 200, if I'm not wrong.
Okay.
But, I think they've got a market. Yeah, definitely. Market cap of 13.4 billion. So they're going to be up there. All right. Well, Dexus is one. We'll highlight that.
All right. Next company for our summer special is Fluence Corp, ASX code FLC.
So Fluence Corporation, market cap of 284 million Ren, and they are a water treatment company that do what?
I think they treat water.
I guess we'll find out.
I think they build and maintain water assets.
Okay,
So
nice.
We'll learn all about them as we go.
Is this veto or no?
No,
You're happy with that?
water's a critical part of our
Life.
society.
All right, nice. That's 2. What have we got next?
Okay, next one is ASX code ISX.
ISX. So we know this one, Ren. This was, I signed this. Still is. I did this for our mastermind. But as much as I pitched it, I'm going to veto this one from my end.
Okay.
It's in a trading halt.
Yep.
Has been for about a month now. And for that reason, I think we should do something that we haven't done on the show before.
Yeah, 100% agree.
Nice. All right. So we've still got 8 to go.
Yes.
All right. So, Ren, for our third company, we have Volpara. VHT is the code, and they're a health technologies company specializing in breast cancer tech using AI.
There you go. Now, look, it is tempting to use my veto on this if it's a biotech company in its first stage clinical trial. And
Yeah, around since 2009, 10 years.
Look, I think we do it.
Yeah.
We've still got a lot of companies to go, so we should keep ripping through it. But I might be very annoyed that I didn't if we're just talking about a clinical trial that we have no idea the results of.
So we've got 3, 7 to go. Next one, we have Paradigm Biopharmaceuticals, ASX PAR.
This is a tempting one to veto before I even know what the company does.
Yeah, I tend to agree with you on this one. Paradigm is an Australian biopharmaceutical company that is focused on repurposing the drug pentosan
All right,
for the treatment of inflammation.
I'm going to say I love what they're trying to do, but I don't think they're the right company to do a summer series
Full
episode.
episode. So we're going to
I'm gonna
veto
use
that
my
one.
veto, yeah.
So we each have a veto left. All right, next one. So we've still got 7 to go. Randomizing. Apen, APX. This is a must.
Yeah,
We're going to do it. It's part of the wax technology companies here in Australia. So rock and roll with that one.
Yeah.
6 to go. Randomize. Avita Medical, another medical company, is a global regenerative medicine company using spray-on skin cell therapy for an array of dermal applications.
Let's give it a crack.
Yep, let's give it a crack. Sounds interesting. I don't know anything about spray-on skin technologies.
Well, that's what this episode's for.
Yes, so 5 to go. Gage Road Brewery.
Yeah, so this has been the most suggested stock of the 180 people that reached out to us.
Nice.
I reckon Gage was number one. So let's definitely do this one.
Lock and load with that. So Ren, 4 to go, another random click, and we've got Rectifier Technologies. I think they're engaged in, looks like power supply units of some description. So we know nothing about that. Do we want to give it a crack?
Let's do it. It looks like they're in batteries for homes and then also a bunch of industrial applications. So let's do it.
Nice. So randomize number 7 is Goodman Group.
Property Group. Let's do it.
Yep, Integrated Commercial and Australian Property Group. We do have Dexus, though, which are also involved in property, but we're okay.
You've got a veto, so yeah.
I'm going to veto.
You're going to veto?
Yeah.
Interesting.
Yeah, too closely related to...
Fair enough.
I could be wrong, but...
Australians do love property, though.
That's true.
And potentially there would have been an interesting playoff between a REIT structure and a corporate structure.
Fine.
No. Once you vetoed, no. I think that's a good call.
All right. ASX SOL.
Sol Patterson's?
Yes.
Yeah.
Yeah.
But they're not this chemist.
No.
No, they're like an investment holding company. Let's do it.
Let's do it.
Yeah.
So, Ren, we've got 2 to go. You still hold 1 veto if you would like.
Great. So I've got the power.
Got AMS is the ASX code.
Is a global video technology company that enhances video content creation by producing products that connect the imaging and computer worlds together.
Right. Are we in or out?
Look, I think we're in.
Okay.
Its share price has been on a nice ride this year, so let's see what all the fuss is about.
Let's see. Nice. So that was number 8. We've got 2 to go. The next one is coming in hot, and it is NEA, Ren. ASX code NEA.
Is this Nearmap? Yeah,
it is Nearmap. Let's do it.
Let's do it.
It's a hot stock this year.
A mate of ours, two mates of ours used to have a big fight about Nearmap v Spookfish, two companies that did similar things.
Okay.
I think Nearmap has probably won.
Well, we can bring that out. Now,
Yes.
The final one, Ren, is ASX code PPK, which is PPK Group.
So PPK Group does a lot of technology for mining companies and mines. Just because I'm not really interested in doing a bunch of research on mining companies.
The veto.
I've got a veto. Use it or lose it, as the rugby refs used to say. I'm going to use it.
All right. The final stock coming in is Digital Wine Venture. I like the sound of it.
I like the sound of it. Let's not even look it up.
Nah,
let's do it.
Let's do it. So to recap on our 10 stocks before we close out for this episode, we've got Digital Wine Venture, Apen, Rectifier Technologies, Dexus, as well as ASX code Sol, which was Sol Patterson. We've got Avita Medical, Nearmap, Volpara, Fluence Corp, Gage Brewery, and AMS, which I can't remember what that one was, Ren, but 10 very interesting stocks there.
Yes. I'm looking forward to it. I liked the fact that
11, actually. We overshot. We said we've got 11.
Oh, what? Are you kidding?
No.
Do we just do 11?
We've got 11. We'll see how we go when we record them, and we will make an executive decision.
Okay,
but we've got 11 stocks to choose
So
from.
that just keeps everyone in suspense.
Yes.
If one of the 11 was ones that they chose.
Absolutely. So let's leave it there, Ren. That's the wrap for the year. It's been an awesome year for us. Obviously, we're not going anywhere, but we've got, as we said, a few interviews and whatnot to wrap up before we go on holidays. So it's been awesome. Thanks for everyone for listening and continuing to do so. Share the love. Buy some merch.
Yes.
equitymates.com/shop. There's some t-shirts available, and leave us a review if you can. We'd really appreciate that.
And the biggest thing as we wrap up for the year is over the Christmas break, we're going to release Get Started Investing.
Absolutely.
We want to get it out in front of people just, as they're getting to their New Year's resolutions and they're thinking, I really should get on top of my money this year. Without you guys, we can't make this podcast, and would really appreciate your help in driving support for it in that first week or in that first month. So you'll obviously hear more about it when we release it, but make sure you subscribe, make sure you listen, make sure you tell your family at the Christmas party about it. Would really appreciate your support to get the word out and get it trending and get it as big as possible so more people can get started investing and join us all on this journey.
Nice. Love it, Ren. So we'll leave it there. Can't wait to release these interviews that we have coming up. We've got some awesome guests. So always great to chat stocks in 2019 with you, and we'll chat next week.
Sounds good.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.
Equity Mates.